All right. Hey, aloha, Love Tribe. Aloha, Denver Space. Aloha, everybody on planet Earth who's tuning in. Um, getting the feedback there. Do you hear that? No, good. Okay. You guys, this is a totally new experience that we're going to start delivering to you at the Denver Space, which is one of the only, handful of citadels all over the world. And we're so excited. I decided I needed to stay home tonight because it's totally dumping up here and I don't want to drive in the ice. But we've been planning this every second Tuesday of the month. We're starting to do Women in Bitcoin. And so we're doing an in-person meetup. So all these wonderful women in Denver. Hi, ladies, if you're there, if you can see me. Hello. Um, I wish I could hug you. We are working on, different topics each month, and the ladies get to pick the topics. And so they say, hey, we want to learn about this or that. And so we had a big request to do Bitcoin taxes. And so, of course, who else should we have as the most, distinguished guests than Joe, Joey, and Seth of Satoshi Pacioli Accounting. Welcome, you guys.
Thank you.
Thanks for having us.
Yeah, thanks.
So glad you guys are here. So do you want to tell everybody here a little bit about what your company does and how you help Bitcoiners and how we're going to obviously have a little, mini little presentation, and then we'll open it up to some questions, with everybody in the physical space in Denver and then online, everybody, because we're obviously live streaming this all over.
You want to kick things off, Joey, being there in person?
Go, Joey!
Yeah, so I joined Satoshi Pacioli back last year in January. I've been doing full-fledged bookkeeping since about 2009, and kind of the bookkeeping in general is very well versed in lots of different types of businesses. Kind of work with small, medium-sized businesses and a lot of people that just want to provide a product or service. And as they do that, they learn that they're in business, and then that also requires proper record keeping, and then also requires being able to submit your taxes and work with wonderful CPAs like Joe and Seth. So I feel blessed to be on this team and to be able to also be in the Bitcoin space because it's kind of a wild, wild west where there's all these extra kind of things that need to be done on the record keeping side that a lot of accountants and bookkeepers in the fiat world don't want to deal with because it's a bit extra work. So we feel pretty blessed to be able to be value aligned with other Bitcoiners and see the same thing they do with the asset as well as the network that Bitcoin is, and be able to kind of straddle the financial systems we have where it's Bitcoin and the current financial system, and how do these two merge and kind of move their way into a new direction.
Awesome. Thanks, Joey. All right, Seth.
Hey everyone, thank you for having us. So yeah, my name is Seth Bayless. I joined Satoshi Pacioli a little over a year ago now. Joined the team with Joe. Joe had been doing a few tax returns on his own reluctantly, and he brought me on to help build that out. So the tax team has grown. We just got another person to help us with the spring filing, so full speed ahead there. But prior to joining Joe here, I spent about 3 years in public accounting doing tax compliance work. So I know a lot about taxes for better or worse. And yeah, I'm happy to serve Bitcoiners and their companies.
Awesome. Thanks, Seth. Welcome. All right, Joe Wood.
Yeah. So Joe Wood, I started Satoshi Pacioli about 3 years ago now. Before that, I had about 14 years of experience in broad public accounting, some private companies, some large, some small, some nonprofits. But as I got more deeper and deeper down the Bitcoin rabbit hole, I wanted to spend more and more time focused on Bitcoin. And so I guess the most logical way for me to do that was to start a company that was an accounting company that was focused on Bitcoin. So yeah, about 3 years ago, I started the company, really focused on counting Bitcoin startups at first, where it was, hey, we just got some funding. Maybe we started up in the last year or so. We need some accounting support. We're not ready to hire a full-time controller yet. And so trying to fill that gap for them, right, as they build out their team and their products. Along the way there, continuously got like the question of like, hey, I need tax support. So started doing a little bit of that a couple of years ago. really saw the growth there. Really had the need to kind of bring someone on full time for that a year ago. So that was when we brought Seth on. And then along the same lines there, like on the bookkeeping accounting side grew as well. So bringing Joey on around that same time. And then since then, we've essentially doubled the team again. So we went from, one person to 3 people to 6 people now. So we got a lot of growth in the last year here.
Amazing. And so are most of your clients individuals or businesses?
About 50-50.
Okay, cool.
Yeah.
And so, for whoever's in the audience right now, whether you're, in person at the space or if you're, watching this live, please feel free, you guys. There's a Q&A that you can put in Facebook or in YouTube. And so just put some stuff in the chat if you want to ask some questions. And for those of you who are at the Denver space, ladies, you all know it should be up on the board where you guys can do a poll.denver.space. And then there's a code that you can put in. So I've already got some of your questions here that we're going to queue up. But before we start getting into those questions, guys, what do you think is for those of us listening, whether we're an individual, whether we're a sole proprietor, a small business, what are the number 1, 2, and 3 things, that people should be paying attention to when they're tracking their Bitcoin, in their personal life and in their business?
You want me to take that one, Seth?
Yeah, you can take it. I was gonna say off the top of my head, I feel like the biggest piece we're seeing with people right now is missing cost basis when they're trying to work on their transaction analysis as a whole.
Yeah.
So good record keeping, that's probably true across the board. Yeah, I feel like that's a good one. Curious for your thoughts, Joe.
Yeah, a lot of times the questions that we ask is how many places have you bought from and how far back does it go, right? And did you buy from an exchange that no longer exists? If you bought in the last couple of years, if you bought mainly from 1 or 2 places, it's going to be pretty easy to get that stuff. If you're going back 5, 6, 7 years, if you bought from exchanges that no longer exist and you don't have the exports anymore, it can be a lot harder to get to your cost basis on those.
And so because that is actually that's the first question here. It says, if you lost some of your historical transactions from an exchange, missing cost basis, what should you do? So what are the actions that you would recommend for folks who've got, a jambalaya of transactions that might have some cost basis, and some are just like, well, I think I bought something and I think it was in June and I think it was in, this year, how do you help them just stay legit if they're not just totally offline, but if people are tracking this stuff, how do you help them come up with those cost bases?
Yeah, I mean, if you can get into a ballpark, that certainly helps. If you know that the year, the month, at least we can check the price during that time period to get a ballpark there, and then maybe you can go back to something on chain where you can see funds moving there, and so you can kind of get back to some of that historical stuff. And then the other thing that we kind of get into with people a little bit is that matters more now in the short term. If you are holding Bitcoin for the long term, that becomes less and less important, where it's if Bitcoin goes to $1 million, whether you bought it at 20,000 or 30,000 is not as big a deal. If you're going to sell it next week though, and you bought it at 80 or 90, that matters a lot more. Right. So it does matter to kind of your time frame and your threshold there. But yeah, to the extent that we can at least narrow it down into some band where we can pick a price range, that gets us closer than just having to put 0 on the cost base, which is going to be least advantageous.
Totally.
And I've seen.
Sorry, go ahead.
I've helped with people, maybe suggest if you could see the transfer leaving your bank to an exchange, then that can give you an estimate of maybe when you did purchase that Bitcoin, and then maybe you can see when it was received and an address in your wallet, and that's another good one. But the message I tell people pretty consistently is just to pick a consistent method and stay consistent with it. And at the end of the day, that's what the IRS is going to be looking for. But if you're all over the place and you're doing this method and allowing this one later, that's when it might raise a little red flags.
And so let's talk about a couple of the methods, because obviously we've got some changes coming up here in 2025, 2026. And can you guys did a webinar, I don't know, maybe a month-ish ago, maybe I think it was maybe on December 30th, maybe, when they had all these like, you need to take a snapshot of this and that. Are you LIFO and HIFO, FIFO, blah, blah, blah. Can you help everybody understand, if they may not understand the difference between what type of cost, the bases are, and like what those are, and what is obviously each case is going to be different based on like, are people holding it, like you said, for 20 years, or is it stuff where people are going to need to take it out? Is it for retirement? Is it not? Like what are these, what's a LIFO and a HIFO? Are those like little characters? What is that?
You want to take that, Seth?
Yeah, so LIFO is last in, first out. HIFO is highest in, first out, and FIFO is first in, first out. And I feel like the LIFO and FIFO are more traditional, like what I learned in school. HIFO seems to kind of be a newer term, especially when it relates to Bitcoin and other cryptocurrencies. But yeah, relating to the new cost basis guidance, essentially with the IRS, all Bitcoin purchases pre 2025, you can pick and choose which basis you want to use. So you can choose HIFO if you want to minimize taxes. You can continue to use FIFO if you wanted to, but then going forward, starting January 1st, 2026, and then in perpetuity, exchanges are going to be required to use first in, first out. So assuming, whenever you sell, it's most likely going to result in a higher tax there.
And so they're required in 2026, or if you make the declaration, if you make a declaration ahead of time, is that like, if I say I want to use HIFO, like, do I get to say I'm using HIFO in 2026?
Yes, for any sales. The big difference is like when you buy the Bitcoin. So if this is Bitcoin you bought in 2017, you can pick and choose that basis. But if you buy Bitcoin in 2027, that's going to have to be first in, first out on that Bitcoin. So it's kind of just a cutoff point between old
Okay.
Bitcoin when it was kind of Wild West, and now we've got more rules and regulations for new purchases going forward.
And what you're going to start seeing there, right, is like, let's just pick Strike as an example. Let's say you're DCA on Strike and you're buying every week. And then, in February, you're selling some. Like, they're going to go back to your buys as of the beginning of the year 2026, because that's kind of your starting point, right? And they're going to say, hey, whatever you bought at the beginning of the year, that's your first in. That's going to be your first out. That's going to be your cost basis for this sale that you made in February. That's assuming I bought on Strike, right? I may send money to Strike to sell it in 2026. For that, they're going to require you to give them your cost basis, and so that's still on you to pick. If you still want to use HIFO for Bitcoin that you acquired pre 2026, you can do that. You just have to be able to give that information, have it be accurate, so that Strike can go and then report on that. But that's something that I think you're going to get messaging from exchanges over the next 6 months or so, and that they're not going to spring that on people on January 1, hopefully. So like they're going to probably phase into that.
And is there like, I know there are some like crypto tax softwares out there that people have used, and I used some, a couple years ago when I first delved into, what's Bitcoin, what's shitcoin. Oh, I'm going to go be a trader. Look at me. No, I wasn't. And so that lasted a whole 2 months of my life until I realized Bitcoin was a tool for freedom and peace. Then I went that whole direction of Bitcoin. But, during that period of time, there was like, hundreds and hundreds and hundreds of transactions, do you guys recommend any kind of, because, and I'm going to pull this up in just a second, your spreadsheet. And ladies, everybody who's listening, I'm going to give you guys this link and I'll put it in our Telegram group and I'll put it up on social media if that's okay with you guys. But Joe and Joey and Seth made this great spreadsheet about, it's a tracking spreadsheet. Do you recommend for people to use software if they're doing a lot of purchases? It's one thing if it's like, okay, I'm buying, $100 of Bitcoin every Friday. That's kind of easy to track versus they're going in and out and doing all this crazy stuff. Like what do you recommend for folks?
Yeah, I mean, we made our spreadsheet trying to really focus on the Bitcoin side of things, and really for like the simplistic, hey, you're buying, you're selling. I think we probably have some work to do on that to make it more robust, so it can do more calculations in there, so it can handle more lines. But in theory, it should work for a whole bunch of buys and a whole bunch of sells, where you're getting into trading into different assets and, you know, exchanges in there, Ethereum to Solana, back to Bitcoin, all that. It's really not built for that. And so that's where like going to a software like Coin Tracker is probably going to be necessary, and connect to different exchanges and stuff. We haven't built that out, and probably is outside of our wheelhouse of what we'd want to spend time on. And so really it is your complexity there. There's a bunch of them out there. They broadly work well if you can connect it to exchanges. The APIs work if you're not missing anything on your cost basis. We tried to build this spreadsheet here with the thought in mind of, hey, if you don't have all your data, it will still work, right? It won't error out on you. It'll still calculate for you. And you can kind of see as this runs, essentially has a macro in here. You can run it in Google Sheets, or you can run it in Excel. You can kind of see how it's working and like recalculate it right in the file, versus the like Coin Tracker and those softwares are a bit of a black box, where it's just, I give it all my information, it pumps me back a number, and I hope that it's right. I give it to my accountant. And so we hope this is a little bit more transparent. You can play around with the numbers a little bit. And obviously, if you run into questions, obviously reach out to us, and either we can walk you through it, or see if there's an issue with the spreadsheet that we have to kind of troubleshoot.
Yeah, and part of the comparison too is going to be your level of privacy, because when you're putting your information into these centralized systems to be able to track your taxes, it's connecting to multiple exchanges, and what happens with that data in the future. There's just the honeypots of the individual exchanges, and then there's also the accumulated information inside of one of those centralized systems to be able to give you the tax information. And then after that, it's like, what happens if AI gets this information and gets to do all this stuff that we can't expect? And so that's why we built this, because you can basically download the spreadsheet, do it locally. You don't even have to put your transaction data in there. It can actually calculate everything without that. So there's kind of just different levels of privacy you might be looking for. Some people may not need that, and then some people definitely want to have that.
Yeah, I think that's the intimidating thing for all of us, right? I mean, it's like we don't want to have the AIs start to get everything and then just know every little transaction that we had from all of these places. But it's like, this is kind of a side question. Do you feel like, unless we are just like super cypherpunks and really like just out of the system and living, like Luke Skywalker in the cave, are we really going to be able to avoid that, level of scrutiny with these computers that, can obviously, I mean, we see what Midjourney can do in like 14 seconds. It can make like a masterpiece, so I feel like we're up against the machines, and then whoever's controlling the machines, is going to have the ability to kind of have a lot more access to things that we would like them to be private. How would you suggest for people to, this isn't obviously a privacy panel, but how would you suggest for people, to make sure if they're really interested in that to protect themselves, in that way?
Yeah, I mean, I think this is probably there's probably two different ways to look at that question. One is like, when we're looking at this data specifically, we're like, ultimately you have to put this data together to give it to the IRS anyways. And so you're obviously losing some privacy if you have to report that to the IRS. I think the other part of that question, though, kind of bakes into how private does Bitcoin evolve into over the coming years? How much chain analysis can you do on the base level versus, some of these privacy tools? How much are they broadly used? I think that all probably plays into like the kind of the heart of that question. Ultimately, like as an individual, you need to have this data and be able to get to it to report to the IRS. Anytime you're putting that data together to be able to report on it, there's some like level there where, if it sits anywhere on the internet, like it's susceptible to, other people being able to see it. So an unfortunate side effect. I mean, we were talking before we started here, like maybe that's a different question at the end of the year where there's no IRS, but like we have a long way to go there. So
come on, Ron Paul, come on, everybody, let's get rid of these motherfuckers.
Yeah, and I'd say additionally is kind of like, what things are in your control. And if there is an ability, which is why I was really happy about this spreadsheet getting put together, is that there's one little aspect we can say, well, this is at least more in my control than me having it elsewhere. And yes,
Yeah.
Already KYC'd on the exchanges. Yes, I'm filing my taxes, so here's information. But at least there's like a little bit here that I know that is in my control and is not sitting in all these other places of unknowns.
And so Joey, somebody asked what is good record keeping? Like, so can you guys help me like look here, like explain like what these tabs are and everything, just so that folks who are gonna who want to use this, like what we've got, obviously a date, a label, a value, balance, fee, value, or transaction ID. Like what are the most important things that people should be tracking so they can CYA?
Yeah, so as just a base layer for general record keeping, I think we have a different perspective in the fiat world where we can just go to the bank and download the statement at any point almost. And now we've seen through the history of Bitcoin where exchanges have fallen out of existence, and now you have no data if you never grabbed it. I've been lucky that I've been a bookkeeper for so long that I've been trained to constantly pull my data off of websites because I've had to do that for all my clients this entire time. So I do it for myself also. But I think it's a very good practice to just pull your data from any exchange, any wallet, whenever you can, and choose maybe wallets that give you better export functions. I recently ran into a Bitcoin wallet that literally was a PDF only spreadsheet, or sorry, PDF only export. So like 150 pages of PDFs, individual transactions. None of it was searchable, and none of it you could actually like copy paste information out. So I had to like manually type everything out. So play with it when you first get your wallets or exchanges, see what they do for their exports, and maybe use the systems that work best for you. So
do you have any that you recommend?
Yeah, pulling them out. They're all kind of different. I mean, Sparrow is maybe probably the most best first one where you can pull that data out once you put in your information. The exchanges are pretty good. It's just more of, I think, getting in the frequency of deciding like quarterly or yearly, I'm going to pull the spreadsheet out. If anything happens, you at least have your data and it's not lost at some point. Because I know many people have run into that issue where they just don't have the records, and then maybe the wallets aren't the same and you're trying to track all this history and you may not even know how to look at the blockchain. So you can get very lost. But just want to put that base layer of like record keeping is something that's very important that just you kind of have to get used to, get the training wheels and start to pull that information. But Joe and Seth might be a little better at explaining the spreadsheet here. I know there's like a data tab and so forth.
Yeah, I think I mean, I think you covered it really well, high level there. Yeah, I think fundamentally a couple things to remember. This, like, the Irish wants you to be able to do this by like wallet or exchange. So like you would want to like do this if you say you bought on River, like this would be for River specifically. You have a different one for Strike, for example. And so like keeping these separate is probably something that you want to keep in mind. But fundamentally, it's date of the transaction, the value, the balance. So the value there is the Bitcoin value, right? The balance is the total balance. And then you have essentially the fees, which you'll have on essentially transactions outbound, right? You won't have that coming in. And then value in USD as well here. We have an ability to kind of look that up on another page as well. But if you have that, you kind of dump that in there. And then essentially that same sheet, you have essentially, if you want to look at it as purchases and sales, it can also be Bitcoin received and Bitcoin sent. That works the same from a tax perspective. And then there's a little button up there where if you go to Bitcoin on the top right there,
top bar near help.
Yeah, not
hold on, help me. Oh, here. Oh, wow.
Yeah, there you go.
Whoa, what
Isn't
is
that
that?
great to
I
see
didn't know
that
you
there?
could have a thing there.
And then that's where you pick your method. So if you want to pick FIFO here, for example, you pick that and then it would go and run, and it requests authorization to run the macro. And then it should run after you do that.
Yeah, sometimes it takes
I need to like get my
load.
authorization.
There you go. Yeah.
Da-da-da.
Just let me do it live for us.
Allow, blah, blah, blah. Okay. So,
there it goes.
Oh.
Yeah, it begins to kind of populate.
And so there's an area, I can't see the tabs on here with the view, but there's one where it will show you, hey, here's the Bitcoin that you have left, right? Because you had, 10 purchases and then you made some sales. And so now you have like 5 of those left. And then it will also have a part where it shows you all your sales. And so that will break that into those additional tabs automatically for you.
Okay, cool. Well, this is amazing. It's definitely, I don't even, I don't know. What is this thing here where it says Bitcoin? I'm just curious as a nerd. Like that's like some.
That's a good question. I have no idea. Anthony on our team built this. Just a side note, all built essentially like with AI tools as far as getting the coding on it and just testing it there. And so like, no, I don't think technical coding background, but was able to get the coding needed to put it into this sheet and use that. So a very good use of kind of our current technology to use that to our advantage.
So cool, man. And then are you okay, this is super cool. So, okay, so somebody's asking me, and ladies, thank you so much. I'm getting all your questions, so I'm going to ask all of them, I promise. One of the questions says, is this spreadsheet open source? So does that mean like, can somebody take the spreadsheet and then amend it a little?
Do whatever you want with it. When you go in here to take it, you'll automatically make a copy. So you can see this is a copy here.
Okay.
And then I don't know exactly where to point you, but there'll be somewhere in here where you can actually read the code that's in there for that Bitcoin button. And so either if you wanted to take that, add on to it, manipulate it, run wild with it, it's all on there, either on the Google Sheet or the Excel. We only ask if you do make a change to it and it's a big improvement, like let us know so we can incorporate that into future versions. But have at it and feel free to make changes to it.
Awesome. I love that. And like, what a cool thing, right? Like how many other industries are there? I mean, I don't know, Bitcoin's not an industry, but how many other communities are there out there that's just like, yeah, take my shit and do something cool with it and switch it up. That's called free and open source. And so it really, the ethos of Bitcoin in the way that everything is built is so cool because we all really do want to, we all need to make a living and eat and get some milk for our kids, but we all also like get that like, this is super important that we have this way of being with each other and like, oh, wow, you made it a little bit better. Cool. Awesome. Let's use that version instead, and then of course, let's always give credit where credit is due, who made the first version or what you kind of remix stuff from, as a DJ, that's what's, when I remix things, I'm like, yeah, that was a James Brown, sample, so, so it's kind of fun. Okay, cool. I got stuff coming in from, yay. Hey, Michael Leonardi. Yay, brother. So I'm so glad he's on your team. So let's go back over here to a couple more questions for you guys. I want to bring it back, and we're going to go stop sharing really quick. So I've got a few. Okay. What somebody says, are you hiring? We kind of went over this at the beginning, but are you hiring?
Potentially, yes. I'll always potentially. I think it's probably the right answer there. We posted a job on Bitcoiner Jobs probably a month or so ago, and I think we got like 50 applicants. And
wow,
like it's pretty easy to do that if you like post that on a broad job site. But like just on Bitcoiner Jobs itself, I think we got like 500 views and like 10% of those people like applied, and like just really high quality applicants versus like if you just post that on the broader internet, you're going to get like 1 or 2 good applicants out of 100, right? And so all that to say, like right now we're certainly growing as a team. We're trying to manage that internally, but always looking for other talented Bitcoiners out there that want to get into the space. And so just trying to balance right now, like, hey, what are the needs of our existing client base? What is the needs of our upcoming client base? and who are the people out there that can really help us support those needs. So a long answer to say yes. We always want to kind of talk to other Bitcoiners and see who else is out there.
Cool. I know I always think it's just like submit your applications or submit your resume, submit a cover letter, submit your, letter of intent and mission statements. Because you just never know, right? And so I think that's always super important. So yes. So the answer to that question is maybe for the right person. Okay, we've got open source hiring. Okay, so a couple questions. So some people have if you're purchasing items with Bitcoin, do you need to report that to the IRS to calculate gains?
Yes. The technical answer is always yes when you're using Bitcoin as a currency, as money. The IRS treats it as a disposable property. And so yeah, right now people often think, oh, is there an amount under, $200 or whatever it is that the IRS doesn't care? The reality is it probably not popping up on anybody's radar, but the technical answer is if you sell $200 of Bitcoin, it's taxable. If you spend $200 of Bitcoin to purchase something, that's also a taxable event. And so the same going back to the record keeping earlier, if you've done all that work ahead of time and you can just plug one more payment into that spreadsheet or whatever you have, it's not as big a deal. But yeah, if you want to be spending Bitcoin, using Bitcoin every day, right now it is a little bit tough.
And so again, so just for record keeping purposes, what is that just something like, so let's say I gave you guys $200 to do my taxes or whatever. I would just report that I spent $200, but of that Bitcoin, I bought it, whatever, at $100. So I have to, report that gain. Is that how people would do that?
Yeah. And I guess trying to simplify that as much as possible when we go and say like different wallets have their own cost basis, right? If you're going to, most likely if you're using Bitcoin to spend, it's probably from a Lightning wallet, right? And so maybe you purchase some Bitcoin specifically to put it on that Lightning wallet. And so like a good clean cost basis for that Bitcoin. And then you're going to go spend that $1,000 until you use it all up. And so like you have one cost basis for all that Bitcoin that you spent. And you can, at the end of the year, just look and see everything that you spent on that wallet. And so it doesn't have to be something that you're spending a ton of time on, especially kind of going back to what Joey talked about earlier. There are some wallets that have like really good exports where I can just export all the transactions I did for the year versus like some that are not going to have those tools. So using something that like is going to have good reporting if you do want to use Bitcoin and spend it on a daily basis is probably something to be thinking about. I mean, Strike is great for that, especially with their ability to, send USD over the Lightning Network, although that's not exactly spending Bitcoin in the same way. But like I know Strike has really good reporting if you want to use them from it's custodial, but still like a good, easy way to spend Bitcoin and not have to overly engineer your record keeping.
And that's somebody else asked, what happens when you move Bitcoin from one address to another?
Yeah, so technically that it's one personal address to another address that is not a taxable event. And we've seen from people in the past that, let's say you're using Coin Tracker, it might accidentally count a internal movement of Bitcoin from yourself to yourself as a taxable event. So it is important to go in and kind of double check those things and make sure that you're not paying more taxes than you should.
Yeah.
Oh yeah. Yeah. You don't want to do that.
And that's more akin to like a transfer. You're transferring between your bank account or you're
Right.
checking in your savings.
Yeah, exactly. Checking in savings, you're good.
It's not a sale event or a spending event, which would be taxable.
So again, just so for whoever asked this question, just make sure that that's what you're doing, like these guys are saying. So don't accidentally get don't get taxed if you don't.
Another piece with that too, Val, is kind of the in between. Because with Strike, you can use the US dollar side of the app, and basically you as a user are spending US dollars, and you can actually send that to a Bitcoin address so that the person receives Bitcoin. So in terms of, it's like this parallel financial system where it's not a taxable event because you're not actually spending Bitcoin as the user that's sending it, but the person that you're trying to send to, that's receiving it, they're receiving Bitcoin. And that's what Joe was mentioning, that it's the US dollars that are using the Bitcoin financial rails, the Lightning financial rails. And now you're kind of working within the rules essentially to not have a taxable event. You're also not touching your Bitcoin savings. And then you're also getting the person on the other side to receive Bitcoin, which I think is the best of all worlds right now that we can work within.
And is Strike the only one that you know of that is doing that, Joey?
That's all I'm aware of. Yeah. Do you guys know of any others?
So yeah, I think it's just Strike for now.
You just have to
But
be
yeah,
on
that's
the US
something I
dollar
do.
side.
Hmm. Yeah, like I'll leave $10 in the bank account for like a bottle of water at Bitcoin Park or something like that, so I don't have to worry about keeping track of a $2
Cool.
taxable event.
And then this is my question actually, and I know this will be maybe a little side, but with Noster, obviously, and Zaps, and that's a whole beautiful world that we have, and we're watching, you know, creatives and podcasters and musicians and content creators and whoever, like, here you go, here's 20 sats, here's 1,000 sats, here's whatever. What and I know a lot of people on Nostr were a lot even more just like, yeah, whatever, fuck off, we'll figure this out later, because it's like, literally, it's like, oh my gosh, Joey, I gave you 3 cents. Let's report that to the government, it, like, going forward, obviously, as Bitcoin gets larger, do you feel like those kinds of things are we going to see people reporting their zaps? Have you heard anybody even talking about this in your world yet?
Yeah, I mean, it's probably coming. It's a dollar amount thing right now where it's like $1 here, $2 there.
Yeah.
But yeah, I mean, if Noster's catching on and everyone's using Noster and there's significant value creation on there and people are sending significant amounts, I mean, people are already kind of sending significant amounts on there, right? Yeah, I don't think, I mean, it would be interesting if we hear it like in the media in 5 years of like Noster's the way people are trying to like get around like money laundering rules because they're sending millions of sats around to people, right? Like that'd probably be a good problem to have, like a good headline that like Noster's that widely used.
Yeah.
So like same rules broadly apply. It's just we're still very early in that space, so it's more akin to you going down to your local, your local hangout and you're like doing peer to peer stuff, and you're reimbursing somebody for something that they purchased for you, or someone did you a favor, right? Like no one's reporting that type of stuff.
Yeah.
But if it becomes bigger, it becomes global, really, with like millions and millions of people, like that will come, I think.
Okay. That's good to know, just to keep an eye on that. Okay. This is a side tax question. Are expenses related to wealth management services and investment management services tax deductible?
To the extent that they're a business, right, Seth?
Yeah. I believe the only thing that you can deduct on the personal return would be like margin interest. Um, let me actually look that up for you guys.
Okay, cool. Okay,
one piece that I'd mention
sorry, go
again
ahead.
on record keeping, just because there's so many different ways to do it. I think
Mhm.
one thing I didn't mention is finding a wallet that has the ability to have notes per transaction. So when you before you make the transaction, or when you do, usually there's a note spot, and you can actually type a memo into that transaction itself. And so that gives you the information to say, this is what I spent it on, or this is what I received it on. We're so used to having the fiat bank system do those memos for us, whether they
Yeah.
make sense or not. Most of the time, they don't make sense. We don't even know what it means, but we see the memo and it might ring a bell. But now we have that power within our wallets to actually be able to write memos for these things. And like Joe was saying, a lot of times you can have one that exports that too. So you get a much better financial picture if you do these small little things as you're making these transactions to make a memo for yourself for the future.
Yeah, you gotta love a good memo. Especially if you're sending, sats. Okay, one more question here. And I don't know, we kind of talked about this a little bit earlier, so this may not be totally applicable. The tax rules for 2025 have changed, but what is the strategy for minimizing taxes under the 2024 rules? How does the strategy change for 2025 going forward? Not sure if that's.
You want to cover that, Seth?
Yeah, and I was going to say to answer the last question, pre-TCJA, so the tax cuts that Trump enacted, you could, if you itemize, deduct like 2%. So that has gone away. But like Joe said, if it is related to a business expense, then that would be applicable. But
And
just a standard.
that could be
Go
coming
ahead.
back. Presumably, there's going to be another similar type of tax act this year. I assume we'll see what's in that, right?
Yeah.
Well, okay, we talked about this earlier, and so this was one of my questions too, and this will dovetail in. There's the question we talked about in the beginning, which was, if you file an extension for your return, are you going to get, more likely to be red flagged for an audit? And obviously, we know that there's a lot of things changing, and again, if we can pray for the IRS to go away, that would be great. But is that something that people should worry about if they're like, oh gosh, I don't have my bookkeeping in order and I want to put an extension until October? What would you say?
There's nothing that'll penalize you on having extending your return. The one thing to note is if you do have a balance due, and you don't make an extension payment, you could be subject to a failure to pay penalty. And then any amount that is owed as of 4/15, that would start to accrue interest and penalties throughout the year. So if you want to just extend your return and hope the IRS goes away and you do have a balance due and they don't go away, it could be an expensive choice. So it's just, stuff to consider though.
And expensive is relative, right? And so like some people, if they get a $2,000 tax bill and they have to pay another $1,000 in interest, they'll be like, oh, that's a lot more money. Some people will be like, I would rather keep that $2,000 holding in Bitcoin for some period of time, versus like giving that money to the IRS earlier, right? And so like we have clients all over the board there of like, no, I don't want to owe anything on April 15th. I want to make sure I'm all paid up to, hey, I'm going to push this as long as possible. And we just try to give them the information so that they are at least knowledgeable when they're making those decisions.
Yeah. But so aside from kind of the financial shell game of, should I keep the money and that whole thing, is there anything in your experience that would red flag anybody if, let's say, they did that? Oh, I'm going to keep the 2,000 and I'll give you guys the interest later and whatever. If they do have a bill that's owed, is that going to give them a potential audit flag that you are aware of?
I don't think there would be any increased risk of audit there. You could get into fraud if you were to like file a fraudulent tax return that has a big refund, and then it turns out, then you amend it later and like, oh, here's that money back. Like, definitely wouldn't recommend doing that. But no, I don't think having a balance due and not paying it is a red flag or anything. And then,
I think,
like we said at the beginning, just the fact that you extend your return doesn't necessarily make you more at risk for an audit by any means.
And I think one of the things that, because people will miss this sometimes, make sure you file the extension. It takes like 5 minutes, probably less than 5 minutes. Like, even if you just want to push it off and not worry about it for 6 months, deal with the interest and everything, like you still have to do that extension process by April 15th. If you do it April 16th, April 17th, you're gonna get hit with a penalty that you wouldn't have otherwise. So like make sure you file the extension and then make sure you file something by October 15th, even if that's not finalized as well, right? Like as long as you get it in, like we have clients that will go back and amend for prior year returns because something was off. It's still better to do that than miss that extended deadline as well. So like hitting the deadlines is more important than paying the full balance you owe. That's where you can get into additional penalties that you just have no reason to pay.
And this is a perfect segue into this question. Somebody says, what's the statute of limitation if taxes were missed on, whether it's your income, your capital gains, whatever, how many years till I don't have to worry about an audit?
So the statute of limitations is usually 3 years, and then it can go up to, I believe it was 6 or 7 years if you underreport your income by 25% or more. So, if there was intentional fraud, they can go back a lot longer. But if you received a small amount of the Bitcoin Cash fork and you dumped it and you didn't report it, you're probably going to be okay, unless you're Roger Ver, I guess. But yeah,
He's probably over that 25% threshold. Yeah.
Yeah, I would think so.
Okay, so possibly 3 years, but if you were underreporting things by 25% or more, 7 years, they can do a look back on you kind of thing.
Yeah, but
I
reasonably, I like their ability and their willingness to really dive into that. They have a lot of things that they're focused on that are probably, unless you're like, high net worth, high earner that's paying very little on taxes, you're probably not on their radar in the way that you would be. Like I know a lot of Bitcoiners are worried about getting targeted by the IRS. Anecdotal, I don't think we've seen a ton of that yet. Certainly anything can happen. But it doesn't seem like Bitcoiners are getting targeted at a higher rate or anything because they see purchases from an exchange or you reported Bitcoin in 1 year. So now you're going to get audited forever. That doesn't seem to be the case so far.
Okay. Yeah, I think I know I have several friends who are miners and home miners, and they're like, "Oh my gosh, I've been earning Bitcoin for 10 years or however long, and what do I do if I want to start so I think it's obviously it's a rainbow of use cases and different people's scenarios of how, they want to, make sure that they're covering their butts and not getting in trouble, but also just like it's tough, because we're obviously dealing with, again, the Bitcoin ethos is peer to peer. We don't want to deal with like the IRS. We just want to send Bitcoin to each other and live freely. Wouldn't that be great? One of the questions somebody said, do you believe the IRS is going to get abolished?
I wish it would. I look
Like,
forward to getting another job, but
any over unders
realistically,
on that little bet?
no, I wouldn't be betting on it necessarily. I mean, there's a lot of downstream things to deal with regarding like delayed taxes paid on retirement accounts and things like that. So it's definitely not as easy as just flipping a switch and we all move on with our lives.
I know, la la la.
But yeah, I mean, I'm absolutely here for it.
Yeah. I mean, maybe a smaller like goal there is like if you could some way get, honestly, for me, if it's something where like you can spend a small amount of Bitcoin, some threshold there where it's not a taxable event. I even like would be willing to say if you send it to an exchange, you convert it to fiat, it's taxable. But if you spend it peer to peer, like you're using it as money, that shouldn't be taxable. Like,
Yeah.
I'll even go that far, give them that much like wiggle room, right? I think that would fundamentally change the way people kind of look at Bitcoin and use Bitcoin, right? Of like, hey, if I buy Bitcoin and then I sell it, I got to pay a 15% capital gains tax. Or if I buy it and then I use it for things that I need that I was going to buy anyways, I don't. I think that would be huge. And it would be, I think, a relatively easy thing to do. Like the government's still going to get most of their money. So most people are still going to just trade back to fiat, right? I think that's probably a lot more doable and politically advantageous than like we're just going to get rid of the whole IRS or we're going to get rid of all capital gains tax. I think you're going to get a lot of pushback on that. I would love it, but we'll see.
And that's actually being talked about because we had a member-only event here at the space a few weeks ago, and one of the lawyers was speaking about that's one of the discussions of how do we have de minimis amounts of Bitcoin that's not taxable, because that'd be a game changer where we can do this small amounts of transactions between each other, and it's nothing that needs to be tracked because it's a waste of everybody's time, and it doesn't really make the government any taxes to begin with. It's not really worth anybody's time. So I think it's in discussions now, but we're not there yet. But it would be a great win to have de minimis amounts of non-taxable Bitcoin.
It would be so great. Like a big giant de minimis, a de maximus.
Yes.
Yeah, I've been saying they should go ahead and adjust it for inflation. Don't bother with 200.
100%.
Let's make it 1,000.
Let's make it 10,000. Like,
Yeah.
not even that. No, none of this $600 Venmo bullshit. Like, give me 10 grand at least. Like, for me, like, I hire people overseas to do some work for me sometimes, whether they're video editors, whatever, and they're Bitcoiners. So I send them Bitcoin. How do I account for that? You know, because it's a Bitcoin to Bitcoin transaction, but it's with somebody overseas. I'm not issuing them 1099s, you know, like, what do I do?
Yeah.
I'm asking you.
Oh yeah, it's a point of transaction, U.S. dollar point of transaction, but because they're international, there's no 1099. So you're correct there. I mean, you guys
Yeah.
can probably say more about it, but that's in a nutshell.
Yeah, if it's business is a business expense like anything else, right? But like you value at the time that you sent it.
That's it. Just value like the way that it would be
Yeah.
like US dollars cent. Okay. Okay. So someone else, there's two more people here. Like we've got a couple more questions. So, and I want to be respectful of your time because I know it's late. This is a similar question that we had at the very beginning of like, what if you don't know your cost basis? Someone else also said here just recently, what's, the worst case scenario, your cost basis is zero. No, it's never going to be zero, guys. Okay. It's going to be guesstimate the shit out of that. And so let's figure out how that works. I don't know if you guys know that I used to work at Deloitte and Touche, and that was like what we used to do. We guesstimated the shit out of things. And so with our giant reams of paper with the holes in the sides, and yeah, I wasn't a very good accountant, guys. I was terrible. I'm a much better DJ and podcaster. But so because they didn't like when I said guesstimate the shit out of that. But so, okay. So for this question, again, we'll just kind of reiterate for the ladies in the room at the Denver space. Yay. And everybody watching virtually. Thank you guys for tuning in. If you don't know the exact amount spent, how do you guesstimate your price? Same thing.
Yeah. I mean, I guess inherent in that question, if you're spending it in sats, I guess, you're going to have a record of it, whether it's a Lightning transaction, it went through your node or through the apps, right? Custodially, or if it's on chain, you're going to have the on chain record. So you're always going to be able to go back and you can always check the Bitcoin price at that time and the amount of sats. So you're always going to be able to recalculate that, whether the wallet does it for you or not. I think that gets to the heart of the question.
I think so too. I mean, I think it's just, again, guys, it's a tough one, right? It's because it's like you're gonna have two scenarios, right? If you're somebody who's been, dabbling and investing, doing whatever you've been doing in Bitcoin up until today, February 11th, and your record keeping has sucked. Well, guess what? You get to kind of play and sort of go back and try to assemble some version of, well, I think about, $100 here, $1,000 here, whatever. And, use the spreadsheet that, we're going to send you guys, or use a piece of paper, whatever you need to do. And then going forward, creating something that's a more solid way that you feel like rock solid, in your transactions. And so you've kind of got catch up, and then you've got, okay, now we're cooking with gas here, And so, does that make sense?
Yeah. And this is no different than before Bitcoin. It's kind of the same thing. It's like, if you don't have a complete financial record, you have to do your damn best to figure out what that picture looks like. And then more importantly, have a very consistent method on how you track that over that time period of not knowing. So if you have a close enough amount and then you have the date, well, then there's Yahoo Market to find the ending Bitcoin price, and you have a price for that day that's historical, or you can have Excel kind of build out those days. So that as long as you have a method and you're doing your damn best to try and make that as honest as possible, that's really what matters. And then, like you said, Val, once you get to that point of now I'm in present time, how do I fix this problem of the past and now prevent that for the future to do this new way of record keeping, or hire us as the awesome team to help you to do any part of that aspect?
Totally. And obviously you guys, so everybody who's at the Denver space, you all know Joey probably came and rallied you into the room so that you could be, present there. So make sure you talk with Joey afterwards. I know he's upstairs. He's going to come downstairs and talk with you. If you have specific questions for your, past taxes, future stuff, I know he'll be there to support you. A couple more questions really quick. So somebody just said, can you talk more broadly about what is a taxable event? again, just to clarify so people understand, like, what does that look like? Because I know we've got I'm sending some sats to my dude in El Salvador versus, it's a tough one. So, I mean, it's not tough. It's just, I want peer to peer.
Yeah. I think it's important too to differentiate that there's different kinds of taxable events. So, like,
Yeah.
your bread and butter, you just sell Bitcoin that you bought, that's a taxable event. It's going to result in a capital gain or a capital loss. Let's say you're home mining, and you earn sats. Technically, that is income. And so that would go in a different section and it would be taxed at a different rate than the capital gains. And so, kind of your high level, you sell, you buy something, by that nature, you're selling to buy it. Yeah, if you earn income from staking or any of that other stuff, airdrops, all that, any time that you're essentially given value for nothing, that would be taxed as income. It would show up on your Schedule 1 on your personal return. Joe, are there any others I'm not thinking of?
No, you covered it. I think the IRS, like on the capital gains tax side, like the IRS is going to look at anything that they would consider a disposal. So anytime that you had Bitcoin and then you no longer have Bitcoin anymore, that's like going to be like a disposal from the IRS standpoint to fall under that capital gains tax. And then, yeah, I think just broadly as we look at Bitcoin as money, right? If you're receiving Bitcoin for any services you provide, products that you provide, just like if you were to provide US dollars, that's going to be revenue to you. And that would fall under, the same rules generally as well. So I think that covers everything though.
Yeah, and then on the record keeping side as well, it's like, because if you know that these are the categories that are taxable, then also set up your wallet structures so that it follows the same thing. Now, you can have a single hardware wallet and put a couple different accounts in there. One account is maybe the money that you use US dollars to buy from an exchange. Maybe another one, if you're doing mining, that's where it's going to. And then if you're making income in Bitcoin, then that's another wallet or another account that it goes to. So it's very easy to be able to track what happened, and it all flows into the tax side.
And kind of in tandem with that, there's the question on the first page of your tax return that kind of asks, did you have any digital assets? And so general guidance, the answer is probably going to be yes if you did interact with any digital assets. However, the notes here for when you can select no, you just outright don't own any digital assets. If you only buy and do not sell any Bitcoin during the year, the answer is no. And then if you transferred to a wallet, internally with yourself and you don't sell, then that would also be no. But anything else, receiving a digital asset as payment for good or service, hard forks, airdrops, anything like that, your classic sell, those are going to result in taxable events.
So we get it like a hard fork where BlackRock has their own chain, and we get it like an extra coin, and we dump all those. That will be a taxable event, right?
Yes.
Yeah.
Okay.
Right. Well, at least we're being forced to hodl, it sounds like. So
Totally, dude. Yeah, I love what Michael is echoing what you guys are saying. I like this idea too about segmentation. I hadn't thought about that. I'm not a miner yet. I want to be a home miner because guess what? We're going to have the Heat Punk Summit at the Denver space in a couple weeks, which is going to be amazing. But so this is something, a question somebody said too. Why is mining income but selling is capital gains? And I think you guys just answered that, right? So there is a difference between something that you're generating as income and you're still going to have cost because there's inputs to create those Bitcoin. So you're not just having a zero cost basis. You're going to have whatever the cost of the inputs of electricity is for that particular Bitcoin, I would imagine, right?
Well, maybe just to clarify that, really try to simplify it a little bit of let's just say you got $100 of Bitcoin that you mined. You got $100 of revenue there. It might have cost you $50 in energy. You'd have a $50 gain there that you'd be taxable. But when we talk about cost basis for that, your cost basis for that Bitcoin would be $100. And then the price fluctuation after that, you'd have a capital gain or loss on, right? So you might hold that Bitcoin, it might go up to 120 and you sell it, you have a capital gain on top of that. So I don't know.
You have a $20 capital gain because
Yeah, if you sold it at that elevated value. So you're talking, you have a few different pieces there. You have the revenue, you have the cost of goods sold, and then you have the profit, and then you have a capital gain or loss based on the fluctuation of Bitcoin after you mined it.
So like it just as this is a good, easy example. So if you had, let's say, whatever, you mined $100 worth of Bitcoin, you have $50 worth of energy inputs, you're going to get taxed as ordinary income at $50,
Yep.
which is your thing. And then if you go later and sell it for 120, now you're going to have a $20 cap gain.
Yes. And some
If
people consider that double tax, which
it
it
does,
kind
it seems
of
like
is.
a ripoff.
Yeah.
I mean, you just
But
double, triple dipping in there. Um,
that's cool. Yeah.
That's not very nice. I don't like the IRS. Let me see if there's any more questions from the ladies in the audience. Hey, ladies, do you guys have any more questions? Somebody said, "What about gifts?" Same thing. I would imagine it's treated as a gift. Like if somebody gifts me $10,000 of Bitcoin.
Yeah. Same rules apply to any gifts.
Yeah.
You want to give background on that at all, Seth?
Yeah, so for if you do gift somebody Bitcoin, you would check yes on that question. Um, the gifting is a little interesting because you can gift like up to a certain amount per year per taxpayer. It changes every year, but it's about like $16,000. And that's before you get into that lifetime exclusion number, which is like $12 million, I think, for Mary Fowl Joint. And that number might change. I saw some proposals; they might be lowering that. But with the gifting, you would just want to make sure that you also send that cost basis to the recipient because they're going to essentially take that cost basis from you. So you can kind of get into like estate planning with that.
Mhm.
Maybe while you're alive, you want to give some Bitcoin to your children or anyone else like that. They're going to keep that cost basis that you had with the asset. However, if you were to pass that asset on to them, when you passed away, they would receive a step up in basis to the fair market value at the time of your death. So it's a couple of different ways to gift Bitcoin to people. But yeah, yet another reason to kind of keep track of your cost basis because it might
Cool.
get a little messy if you start gifting it to people and then they don't know what their basis is there as well.
Right. If we think inheritance are a mess before Bitcoin, like I can't even imagine what this might be in the future if the
Yeah.
person that's gifting that in the future didn't do their own record keeping. It could
Oh
get
my
really
gosh.
messy, tons of wallets and all this rest.
Well, but like, so let's say a gift, let's say I received a gift, right, of whatever, 0.1 Bitcoin, right? So we're going to say it's worth $10,000 today ish. Um, is it like, is that my basis then of whatever I received it at, like whatever today's price is? Does that make
No, that
sense?
it would be whatever their original purchase price was, assuming they bought the asset.
It's their
Um,
original, not
mhm.
my today I received it and it's worth this much. So that's a different, okay.
Yeah.
Yeah,
So for
you're
those of
inheriting their cost basis.
Yeah, and your scenario that you just played out is how it would be if you inherited that due to their death.
Okay,
So
so
you
only at
come,
death is when
yeah,
people get the cost basis of whatever it is today, but if somebody's gifting you something and they got the Bitcoin for $1, you know, you're gonna incur what their cost basis is, and so you have to know what that is. Okay, so these are obviously great questions, guys, and these are questions that obviously, Seth and Joe and Joey can answer, and be your super Satoshi Pacioli accounting firm. Fifth Amendment, right? Da, 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 da. The last question, this is like 5 people have asked. Just what are the top couple tips that you might give people who are preparing their 2024 taxes so that they make sure that they do it, well?
You want to take that, Seth? I think you had a whole list of things.
yeah. So I would say definitely looking at your prior year tax return is a good basis.
Mm,
I something I did this past year was I kind of had like a notepad with my receipts and other items, and I would think, okay, I cleaned up my cost basis and Coinbase at the beginning of the year, so I might get a 1099 from them, and like I would write down, might get a 1099 from this, should get a W-2 from this. So I kind of did that throughout the year. So when I was working on my return like a week ago, I was very easily able to go look and find those items. Yeah, I think just good planning. I think something that I've thought over my time of practicing taxes, I feel like people do make it a boogeyman, and it's not as bad as it seems. The tax returns look complicated, but they are fairly straightforward. You can just read the instructions, and they tell you what to do and how to do it. I think people get a little spooked with it. But yeah, just good record keeping there again, with the tax planning. But yeah, I did have a note to share with people, because a lot of questions we'll get is, I have a W-2. What can I do to lower my taxable burden? And there's not a whole lot you can do there if you just have a W-2 and you haven't tweaked your W-4 withholdings. The appropriate amount should
Mhm.
be withheld. So you should be about break even at the end of the year. That's kind of the goal. But kind of some of the top ways that you can save on taxes for the year. You could look at doing like a backdoor Roth IRA. So it's like kind of a little workaround. Maybe you're over the income limit to contribute to a normal Roth IRA. You're able to kind of do some engineering and you can contribute more than you would normally be allowed. We won't really see it a whole lot this year, hopefully, but tax loss harvesting. On the flip side of that, let's say you want to take the year off and you're not working and you want to live off your Bitcoin. If you keep the amount of Bitcoin that you sell under a certain threshold, you could potentially pay 0% capital gains on that Bitcoin for the year. So
Yeah.
you could have a very low taxable burden for that year. Contributing like a 401k and HSA is a good way to lower your taxable burden.
And
Um,
just a note on that: for the IRA specifically, you can still make contributions for 2024.
Yeah.
You can't make it for your like a 401k for your employer still, but you have until April 15th, right, to make a
yeah,
contribution to an IRA still. So there's time on that one.
yeah. So every year you have until April 5th. So like in this example, you have until April 15th of 2025 to make up to the $7,000 contribution limit for a Roth or a traditional IRA for tax year 2024. So yeah, you have a little bit of extra time there. One tip on the list that I wouldn't necessarily recommend is tax exempt funds or treasury bills. I would probably be sticking to Bitcoin, but it's not financial advice. And then you can invest in real estate if you want to. It has its pros and cons. You can always start a business, but you don't necessarily want to let the tail wag the dog in that scenario. Like if the goal is to pay as little taxes as possible, maybe it's not best to just lose a bunch of money so you don't pay taxes. Maybe it was better just to keep the money and pay that little bit of tax. And then kind of the last thing is optimizing your charitable contributions. And so, Unchained's got a great product
Yeah.
with the donor advice fund. So that's a great way for you to receive an immediate tax benefit for donations. And the beauty of theirs is that those funds are held in Bitcoin and they'll continue to grow in value. And then one day in the future, you can pick and choose a charity of your choice that you want to donate that to. And presumably, it'll hopefully be more money that you're able to contribute to them.
Yeah,
I didn't know Unchained did donor advice funds. That's really
yeah.
cool.
They just
Wow.
started. I think one, I guess, note of caution I would probably try to stress to people on the donation side is like it's always good to donate to people, but
Mhm.
um, it's harder and hard. Like if you're not already itemizing your deductions, it's pretty hard to get an advantage through the donation. And so, like if I'm taking the standard deduction and married, and you're getting 27,000, and you have nothing else to itemize, you're gonna have to give $30,000 of a donation before it helps you. Not to
Yeah.
say don't give $30,000 if you can afford to, right? But it's always unfortunate when like you see someone make a nice donation and then they're not getting any tax benefit of it. And so that's where like the idea for the donor advised fund comes in of like, hey, I can't afford to give 20,000 every year, but maybe I give it all in 1 year and I get a big effect. And so I give that to the donor advised fund and I put $50,000 in there and then I give it out to charities over time, right? But I do it in a year where it's really beneficial to me. Maybe it's a year I was already going to itemize. So try to be strategic about that giving as much as possible so you actually get the tax advantage there.
Yeah, that's perfect advice. And one more thing really quick, just Unchained, obviously, Rocky's one of our Denver Space members. We love him. And I love Unchained, but with the Roth IRA, what's interesting with Unchained is you get to hold two, you're in a multi-sig and you get to hold two of the three keys if you choose to. And so a lot of the other IRA products that are out there, you're not custodying your own Bitcoin. And so God forbid shit hits a fan and you need to jump ship, you still have access to your own Bitcoin if you choose to do a Roth IRA with Unchained. So I think Unchained is incredible. So I highly recommend, just if you're, eligible for doing Roth IRAs, if you make, a certain amount of money, or not too much, because you can't do it if you make too much. What is the threshold, Seth, for a Roth? Like,
I want to say it phases at like $140,000.
yeah.
Let me.
So it's for us normies. It's not for the billionaires.
Yeah, but like I said, there's certain ways to work around that where you could potentially do the backdoor Roth and you could still get money in. You could still do that as of right now. I have also heard chatter that they might be trying to crack down on that too. So
yeah.
um,
And then for the HSA too, guys, like if you're all, if you're not with Crowd Health, who, is a Bitcoiner company that's doing crowd kind of health funding, you can have a health savings account and you can put it in, you can't buy Bitcoin directly, but if you're doing Fidelity, for example, you can get MicroStrategy or you can get an ETF. So you can at least have, your paper Bitcoin kind of thing exposed with those products and services that they have. So there's a couple different ways that you can, do some different creative gymnastics. And so I know that you guys are here to help the ladies and the gentlemen who have tuned in. And I'm just so grateful. Thanks. I know it's late and I know everybody there, whoever's at the space, I hope you guys got your questions answered. And I really, really want you guys to make sure that, like, if you are doing accounting, like, make sure you guys follow these guys and reach out to Seth and Joe and Joey. They are the best in the business as far as I am concerned. Uh, and yeah, any final words? I really want to also just, of course, promote the space in Denver. Denver, again, is one of the, the little push pins on the map that is, becoming one of the Citadel locations. We're having lots of different events there. We're going to be doing a Bitcoin for Holistic Health Summit in April. We're obviously doing the women's events. We're doing tons of stuff with, learning Bitcoin. We've got Eric Yakes. We've got everybody who's just making these great, great events possible. And everybody's a volunteer. Nobody's getting paid. We're just doing this because we love Bitcoin and because we love the mission and we want to bring people together. And so, it takes a village. And so we really want you to make sure you're following the space. Please think about becoming a member or donating. And every little bit counts, as we all know. And I'm so grateful, and Joey's one of the board members. He's been, working diligently, forever with the rest of the board, making this happen. I'm so excited and honored to get to work with you guys and put these events on and hopefully educate people and get new people excited and interested in Bitcoin in our own way. So yeah, that's that. And any final thoughts or words, gentlemen?
Yeah, this has been a labor of love. I love being here at the space. As you mentioned, Tyler's got his event coming up on February 21st and 22nd, I'm pretty sure, for the Heat Punk mining event. We're gonna have a lot of people coming here from out of town, so I think it's gonna be one of our biggest events thus far.
Yeah.
And Joe and Seth are from the park, so like we basically have the space in the park represented here on both sides. Is pretty sweet. I did want to mention all the things that we were just talking about that Seth and Joe were bringing up about all these ways to get these different tax hacks, I guess you could say. Is actually on our Noster. So we basically have that exclusively on our Noster account. So if you go to Satoshi Pacioli on Noster, you might be able to find it through Twitter as well. But Seth's been doing a great job about listing all these different posts that have all these different tax hacks. And basically, everything that we've been talking about right here is built out. So you can read that yourself and kind of find the one that applies to you.
And yeah, I'd say
that's a good point. Yeah, we only give that information out on Noster, not just only because it's Noster, but like there's plenty of that stuff on Twitter already, right? But obviously none of that content on Noster, so we try to get out there. But yeah, I don't have anything else. I appreciate you having us on. Always happy to chat. Obviously, if anybody has additional questions, reach out to us. But appreciate you making some time for us here.
Yeah, absolutely. Thank you for having us. And yeah, I guess kind of my last final thought is, the time to really think about how can I plan for taxes for the next year and start saving money is towards the end of this year. So definitely reach out to us September, October, November. The earlier the better. We can take a look at what you did last year. What are your goals for this next year? And we can try to help you. At the end of the day, our goal is for you to pay as little taxes as possible. So that's a great way to do it with tax planning.
Love it. All right, everybody. Thank you guys so much. Happy Tuesday. Woohoo. It's Techie Tuesday and Women in Bitcoin Tuesday. And I'm so grateful. This is such a cool thing. And like, can you imagine if Satoshi didn't do what Satoshi did? Like, we wouldn't get to be hanging out here with each other and I wouldn't have gotten to meet you all. So thank you, Satoshi. We love you. And God bless all of you and everybody who's down there in Denver. Go hit Joey up. And so he's going to come down there in a second and be there if you guys have any questions. And yeah, we're super duper stoked. Yay, we got someone saying thank you. Yay, we love you, Glenn. So anyways, peace, love, and warm aloha. What I'm going to do is this is all going to, of course, be up on YouTube for everybody to check out. I'm going to put all the links. Is it okay if I put the link to the spreadsheet in the show notes?
Yeah, that'd be great.
Okay, cool. And then again, I'll, if you guys have any questions, reach out to these guys. And I'm not sure what our Women in Bitcoin, I think we might be doing domestic violence in March. That's going to be our next Women in Bitcoin and teaching women how to get out of abusive situations. And then in April, we're going to have Becca Amelie from Anchor Watch and Morgan Richard, who's a CFA. And we're going to talk about planning for the future and inheritance and insurance for your Bitcoin. So we're going to have lots of cool stuff lined up for the second Tuesdays of every month. And I think we are going to try to do these digitally and, this kind of hybrid thing. So we want to get, as many people involved as possible. And we really appreciate your support and make sure, once again, go follow these guys at SatoshiPacioli.com. Manja. All right, guys. Peace, love, and warm aloha. I'll talk to you soon. And Joey, I'll be around if you've got, if any of the ladies need to get a hold of me here. But, we'll end the stream and we'll go from there. But thanks again, you guys. I really appreciate your time. All right.